Good morning and welcome. This is NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Happy Friday to you. Over the course of the next half an hour or so, we'll tell you everything that you need to know to start your day ahead of the curve. Let's start with the headlines. HDFC Bank's ADR gains close to 2%, breaks 2 days of relentless selling. US markets snap a 3-day losing streak as mega-cap tech stocks led by Apple surge. Nasdaq 100 closes at an all-time high and all benchmarks close in the green, even though weekly jobless claims hamper rate cut expectations. RBI Governor Shaktikanta Das says inflation will moderate in the next financial year, and that's an NDTV exclusive. The Sony Group calls for a board meeting today to take a call on the merger with Zee Entertainment Enterprises, as per an Economic Times report. And Gautam Adani says India has emerged as the most important theme at Davos. Now, there could be some respite in selling in the equity markets here in India if the early indications are anything to go by. And overnight, some of the world's largest technology companies saw their share prices surge, with the Nasdaq 100 rising to an all-time high. Shares of Apple rose more than 3% after Bank of America gave it a big upgrade, calling for a 20% upside. As we said yesterday, part of the selling could be attributed to the resetting of expectations on rate cuts in the current year. And the latest data on jobs seems to reinforce that change in expectations. The numbers of Americans filing new claims for unemployment benefits fell quite significantly, unexpectedly, last week to the lowest level in 1 to 1.5 years. And that suggested that growth in jobs likely remained strong in January. And it's also a strong start to trade in the Asia-Pacific region this morning, as investors see Japan December inflation hitting its lowest since June 2022. Only the Chinese market looking a little wobbly, but the other markets looking quite strong at this juncture. Speaking of inflation, the Reserve Bank of India's governor, in an exclusive conversation with NDTV, said that inflation will moderate in the next financial year. Listen in.
Immediately after the Ukraine war, our headline inflation had touched 7.8%. Now thereafter, because of the monetary policy actions which we have taken, which was also aided by the supply side measures taken by the government, inflation has been steadily coming down and we are on our way to reach 4% target. But next year's average is expected to be 4.5%. The positive aspect of it is that our inflation is now well within the target band of inflation, but we are not satisfied with that. We would like our inflation to reach 4% and remain around 4%. Just let me complete that bit. So therefore, that is our endeavor. And the core inflation, the core inflation has now come below, marginally below the 4% headline target. So we expect next year's average inflation to be 4.5, inflation to steadily moderate towards 4%.
All right, let's turn to the equity markets now and talk about where things stand after the weekly options expiry. Let's talk about the major cues as well. HDFC Bank's ADR, by the way, has ended positive overnight, and maybe, just maybe, that's an indication of a little bit of relief, but we'll see soon enough. Agam is joining in to take you through the latest cues from the F&O space. Agam, any relief likely based on the early indications?
Well, it's a wait and watch, Alex, but, if there are a lot of shots into the system, there perhaps could be some expectation of those shots being closed, and that would, of course, result into some sort of respite for those who are long in the market. Well, we haven't really seen too much change yesterday. You could say it's a little bit of a pause, especially considering the deep gash that we saw on the session day before. But yesterday we did still see about a 0.5% cut on the Nifty, and not too much change as far as open interest is concerned. The Bank Nifty futures, on the other hand, are looking at a significant amount of unwinding coming through, about another 8.5% decline, even as the underlying came off by around 0.8%. Moving on, as far as your range And in terms of change in open interest is concerned with respect to the Nifty options, again, a lot more writing now, shifting downwards, and we're starting to see a little more writing around 21,500, 21,600, which perhaps could set you and give you a little bit of a resistance zone, at least as we move into trade this week. And well, it's a very wide 1,000 point range based on maximum open interest now, which is with the 21,000 put at the moment, and all the way up to 22,000 call on the higher end. So keep an eye on that. And let's talk about stocks then, and I'm sure that it will all be about that. We do have shorts building in for LTIM, ICICI Pru, and IndiaMart Intermesh. IndiaMart Intermesh came up with a good set of earnings, so you never know. We possibly could see about a short covering today. Apollo Tyres and Oracle Financial Services, of course, saw longs. Oracle Financial Services was perhaps the stock of the day yesterday. And short covering in Indus Tower and Zydus Life. On the other hand, longs unwinding in Max Financial, L&T Tech, and IndusInd Bank. A whole host of stocks to keep an eye on. Alex, I reckon today it will be about earnings. And of course, we also keep an eye on Reliance Industries,
certainly,
which will announce earnings post-market.
And HUL as well. Thank you so much, Agam, for bringing us those details. Speaking of earnings, let's talk about ones that are already in, and that's IndusInd Bank, which saw its third quarter profit jump over 17%, and that was in line with expectations on account of a rise in income on investments. We've got Mimantsa joining in to break down those key numbers for you. Mimantsa, also I was looking at the margin front, and it looks pretty decent for this bank. What are the key highlights according to you?
Right. Hi, good morning, Alex. So IndusInd Bank reported 17% rise, which met analyst estimates. So analysts that we spoke to yesterday as well, they were saying that, IndusInd Bank is going to be one of the better performing lenders in this quarter. So investment income is something that led to this jump in the bank's bottom line. So investment income rose 31% in October-December to rupees 1,589 crore. The net interest income was also up about 18% in the quarter, which indicates a healthy loan growth of 20%. However, loan growth has been, analysts have revised their loan growth to 17% in FY25 and 26. On deposits front as well, the bank reported a 13% rise due to growth in retail deposits, which has boosted the liquidity coverage ratio to 122%. So things are looking pretty decent for IndusInd Bank right now. But when we talk about the risks, the concern is coming from the gross slippage number reported in this quarter. It was at rupees 1,765 crore, primarily due to the unseasonal weather in some of the states, which has adversely impacted vehicle finance portfolio of IndusInd Bank, along with the rise in stress in agriculture, loan against property, and merchant acquisition. So the slippage number was a little surprising for analysts because they were expecting the slippage numbers to come in at rupees 1,400 crore, but it is slightly higher than that. So having said that, bank in the post-earnings call as well said that the bank is working towards recovery of these accounts. But in terms of asset quality, the NPA ratios seem pretty stable, and provisions have come down by 9% to 969 crore rupees.
Understood. All right. Thanks so much, Mimantsa, for getting us those details. Certainly one to watch out for in trade today in the context of the kind of selling that you've seen in banking names led by HDFC Bank. Let's talk about another heavyweight then, and Reliance Industries is coming out with its earnings for the third quarter, but that is going to be, or is expected to be, post-market today. It will still be in focus. The net profit and revenue is seen higher despite pressure on operating numbers or operating profit. My colleague Vikas Srivastav has this report on what to expect from Reliance Industries.
Reliance Industries' third quarter operational performance is likely to be impacted by a weak performance from the O2C segment. The O2C segment constitutes mostly the refining business and the petrochemical business. In the third quarter, the gross refining margin is lower by almost $2 per barrel. So in the previous quarter, it was around $9.9 per barrel, which has come down to almost $7.9 per barrel, according to analyst estimates tracked by Bloomberg. Now, this is likely to be offset by a strong performance in margins by petrochemical business. The petrochemical margins are seen at almost rupees 191 per ton, compared to 193 per ton compared to 191 per ton in the previous quarter. As far as the net profit and the revenue figures are concerned, the net profit and revenue are likely to do well in the third quarter on the back of very strong performance from the retail and the RGO business. The RGO business has done extremely well on the back of strong footfall, on the back of strong ARPU, that is average revenue per user, and also very good subscriber additions in the third quarter. As far as the retail business is concerned, the retail business has done well on the back of strong footfalls, because the third quarter is also the seasons, like festival seasons quarter. So that has helped boost the revenue. Revenue is likely, the revenue from operations for the consolidated business is likely to be higher to almost 2.54 lakh crores in this quarter compared to 2.34 lakh crore in the previous quarter. The net profit is also seen to be higher by almost 4% to 18,080 crores in the third quarter.
All right, so that's the latest, or those are the expectations for Reliance Industries. And we've also got HUL to contend with. In all probability, it will be towards the latter half of the market session today. And let's take a look at some of the key expectations here, right? You have revenue, which is expected to grow as much as 2% to about 15,640 crore rupees. You have the PAT number that is expected to grow about 7.7% on a year-on-year basis to about 2,665 crore rupees. And margins are seen contracting just a tad bit to about 23.9%. But beyond that, you're going to have to watch for management commentary on the demand scenario, particularly in the rural segment, which has been a bit of a concern for not just HUL, but the other peers in the FMCG space as well, with consumption under pressure, and also competition from a few local brands, which has forced pricing pressure on HUL as well as the other brands in the FMCG space. So, as a result of which, you're going to watch for both the volumes as well as the realizations, because that's going to have a key bearing on the margin picture, not just now, but going forward as well. Raw material prices have been more or less benign, and that's going to be supportive of margin expansion in all probability. So there's a balancing factor that is playing out both on the demand side as well as on the raw material side. So we'll have to see how that pans out. For now, let's turn to something else. It's time for a quick break, but before we head into that break, take a look at what C. Vijay Kumar, the Chief Executive Officer and Managing Director of HCL Tech, had to say about the company's expectations this quarter. We'll be right back.
If you see in 2022 December, we were really at the peak of IT spending. A lot of customers had initiated significant projects. It's just around the time, November, December, is when you saw a lot of tech sector layoffs, and then it kind of spilt over to the IT services in terms of reducing discretionary spend. So we were actually going through a down cycle, and I think which was quite visible in the first half of this year, and it continued. Whereas now, I think it kind of feels like we're at the bottom of the cycle, and the spend could come back. That's the kind of optimism that is there in a number of conversations.
Welcome back. You're watching All You Need to Know. Let's talk about the key stocks that you have to watch out for in trade today. Anushi is joining in with some of those details. Anushi, what are you picking up? Morning.
Morning. So 3 stocks to watch for the list for today. First is PFC Limited, which would be in focus after it has incorporated 2 SPVs in Gujarat and Rajasthan for their transmission projects over there. So these SPVs would be incorporated as the wholly owned subsidiaries of its, again, another subsidiary, which is PFC Consulting Limited. So in the Gujarat one is responsible for potential renewable energy in the Khavda, Gujarat area, while in the Rajasthan, the SPV would include the evacuation of power from the Rajasthan region. So the SPVs are set for the transmission projects for these purposes. Next, coming to Shalby Limited. So Shalby Limited has acquired about 87% stake in PK Healthcare Private Limited, which operates the Sanar International Airports for a consideration of about 102 crores. So this equity stake would be acquired within a 1 month time frame, and this would be through its primary infusion and secondary buyout. So this is in line with the company's aim to increase its presence in the NCR region and get a more hold of the international markets over there, as the company currently holds about 130 bed capacity and derives its 70% of its revenue from the international markets. Along with this, there is additional capex being planned, through which the company will increase its 130 bed capacity to 180 bed capacity going forward. And last on the list is REC Limited, wherein Government of India has designated REC as the overall implementation strategy for the rooftop solar program of the Renewable Energy Ministry, wherein the objective of the REC would be to accumulate about 40,000 megawatt of capacity by the FY 2026 year end. So these are the 3 stocks you should be watching out for.
All right. Those are among the major stocks. Of course, Anushi, thank you so much for joining in and giving us that perspective. UltraTech Cement should also be on your radar because of its third quarter results. The net profit of the company may jump as much as 76%. But to tell you why that is and what the key expectations are, I'm joined by Mihika. Mihika, what can you tell us about the key numbers to watch here?
Yes, so a robust third quarter is expected, mainly because of the pan-India price hikes, which will help realizations, and the lower fuel costs, which will help the EBITDA per ton. Now, Bloomberg estimates estimate a 10% year-on-year revenue rise. EBITDA may rise 43%, and margins are also expected to improve. And net profit also might rise 76%, as you rightly said so. The company is already given its volume growth. They posted a 6% year-on-year volume growth this quarter to 27.3 million ton. This was slightly below expectations, but nonetheless, pan-India, there have been price hikes in various parts of the country. Brokerages expects realizations due to this to rise and improve by 2%. And even though there was some moderation in the price hikes towards the end of November and in December, on a quarterly basis, pan-India cement prices are still 3% higher, and Axis Securities noted major price hikes in the east and southern region. The second point is the power and fuel expenses usually on average account for 30% of a cement company's total expenses, and the international and domestic petroleum, coke and coal prices, which are key raw materials, have come down 30 to 40% year on year. US pet coke prices have declined by around $15 to $20 to $116 per ton, which gives UltraTech a 80 to 90 rupees per ton advantage, and MK expects the EBITDA ton to improve to 1,150 and 1,160 rupees range. So robust expectations for the company today.
Thanks so much, Mika, for bringing us those details. Sticking with earnings then and talking about a couple of, or rather 3 companies, Reliance Industries, Shoppers Stop, as well as Home First Finance. They've all reported their third quarter numbers, and Harsh is joining in to give you some perspective on all 3 of those. Harsh, how does the scorecard look?
Well, yes, let me first start off with Reliance Industries, Alex. You're looking at revenue, which is at around 1,020 crore versus 1,125 crore number same time last year. It's down 9.5%. The pressure largely continuing to come from volumes. Sequentially, though, the revenue has started to pick up, so that's one positive. The other positive is with regard to margins. Margins has seen an uptick. You've seen EBITDA go up to 120 rupees, or rather 120 crore rupees, versus 92 crore number. That's up around 31%. 1% year over year. Your margins have come in at 11.8% versus 8.2%, so you're seeing a margin uptick as well, and that's reflecting on PAT. PAT has gone up by 20% year over year. It's come in at 95.5 odd crore. Let's look at Shoppers Stop's numbers as well. Well, the revenue is up around 9% or thereabouts, muted revenue growth, I would call it. EBITDA is up roughly 2% or thereabouts. Therefore, margins have contracted by around 113 bips on a year-on-year basis, and you're seeing net profit, which is actually down around 41%. Net profit is now at 37 crore versus that 62.5 odd crore number. Let me quickly lastly take it to Home First Finance. The story here is with regard to declining NIMs. You've seen NIMs come off from 6% last quarter to 5.7% now, but you're seeing ROAs hold up, and that's a big positive. So I'll quickly take you through the numbers. Operating profit is up 35%. Your AUM has grown by around 7.5 odd percent sequentially, 33% year over year. So growth continues to remain strong in this segment. You're seeing profit after tax, which is up 34% on a year-on-year basis, a 6% sequential rise. So no major impact on ROAs, just about a 10 bips contraction in ROAs despite a 30 bips contraction in NIMs. Keep your eye out on this one. Solid growth story with profit after tax also growing quite healthily.
All right, thanks so much, Harsh, for bringing us those details. Aarti Industries was a stock that we watched very closely yesterday. It ended with gains of about 5% or thereabouts. And there were a few operational highlights to focus in on. But as of this morning, you have brokerage firm MK Global, which has initiated coverage at a buy rating on the same counter. Varsha is joining in with some of the details of what the brokerage is saying and what the target price indicates. Varsha, what are you picking up? Good morning.
Good morning, Alex. So as you rightly said, so MK has initiated coverage at buy with target price of rupees 750. Now, they expect MMA and MEA, their products to be significantly large and scalable over next few years. Also, if you see their core portfolio is expected to start delivering significantly delta to overall EBITDA for the company. Also, Aarti is poised for structural uptick led by benefits of Europe Plus One. Then capacity announcement by the nitrate players have made India more competitive. And Aarti not being into this product, the decision for not being into this backward integrated product was the right decision as per MK. Also, if you see expansion of existing value chain and entering new value chain will aid earning momentum for the company, and next leg of growth is driven by value-added products. Lastly, their entry into downstream products will lead margin expansion and improve earnings quality.
All right. Thanks so much, Varsha, for bringing us those details. A very quick update on the Zee-Sony deal as well. There's a source-based report in the Economic Times this morning that talks about the board meeting that has been called by Sony Group. Apparently, they're going to be discussing the future of the deal, and by next week, you could have clarity on whether or not they intend to proceed with that deal. So Zee could well be in focus in trade today. But that brings us to the end of this particular edition of All You Need to Know. It's been a pleasure bringing it to you. Do stay tuned. Up next is India Market Open, and this is NDTV Profit.